Good morning, everyone. Today's board meeting will be focused on a sole topic, changing our Sleep Number brand to broaden our commitment to social purpose. This is a significant topic that we as an executive team are passionate about and proposing we take action on within the remaining fiscal year. For this meeting, Kevin Brown and Christopher Krusmark are with me to share where we stand today as a brand and the direction that we want to take Sleep Number. We want to hear your thoughts and any concerns you have with this major shift. So to dive right in, Kevin will start things off with a brand overview.
Thank you, Shelly, and hello, everyone. To start, I just want to affirm Sleep Number brand identity is in a good place. We were ranked 5th largest mattress manufacturer and 2nd largest US bedding retailer for 2020. We hold 8% market share of industry retail revenue in the United States. Our strength will continue to be in staying true to our core mission and values, developing the most innovative and effective sleep technology on the market to improve lives through individualized sleep experiences. However, if we want to take the Sleep Number brand to the next level, we must embody this vision past just mattress technology and our core products. More than ever, society is prioritizing health and recognizing that quality of sleep is a vital contributor to overall well-being. In addition to that, we have a responsibility to move forward, to move society forward and ensure a sustainable future for all. A large goal of ours is to help accelerate the transition to a low-carbon economy. We created the Sleep Number Environmental Impact Team in 2021, but we know we still have a long way to go. Our plan is to focus on near-term improvement, and we are also identifying longer-term opportunities to reduce our carbon footprint and support the communities most impacted by climate change, including extreme weather events. So I welcome any questions that the board has on this matter.
Thanks, Kevin. So I have a question. So we have a strong brand identity among our core audience space. Are we becoming unfamiliar to this segment by pivoting too much from the heart of the brand?
Michael, that's a great question and something that we've weighed on heavily. We will not be overhauling completely though. Our proposal is to broaden the Sleep Number brand to more explicitly include social purpose, which is already an integral part of our wellness and innovation-focused brand. Our environmental, societal, and government strategy is rooted in our company's purpose, supported by our culture of individuality, and driven by our team's dedication to our mission and values. We are deeply committed to doing the right thing and making the world a better place. By being more explicit about our social purpose, though, we can ensure that it is used as a North Star when making decisions, big and small, and in the values that we live as an organization.
This is all great. I really appreciate the full context of our brand today. In the last few years, we've all seen a shift in consumer demand gravitating toward these social purpose companies. Sleep Number is already involved in various organizations. Are we going to expand those commitments or include other organizations?
Thanks for that question, Michael. Our community involvement is something that is near and dear to many of our team members. We recently got a message from one of the families that received our support through the Dream Foundation, and it was a remarkable reminder that our involvement can provide comfort to terminally ill adults and their families in their final months. We will continue our involvement with these organizations, expand where possible, and also create opportunities that enable our team members, suppliers, and communities to thrive.
Thanks, Shelly. I have a question. Where do we anticipate relocating funds to cover these aspirations? Personally, I don't recommend expanding these initiatives at the expense of research and development. We are an innovation-forward brand, and we can lose sight of it.
Thank you for that question. It's an important question, possibly the most important. We have no intention of cutting back on research and development. The additional investment from this initiative will be offset by a strong focus on expense management, cutting back on sales and marketing operating expenses, and continuing to remain operationally efficient.
And if I may, to elaborate on that last point, there's strong evidence that emphasizing social purpose will improve brand reputation, customer loyalty, company culture, and employee satisfaction and retention. These intangible assets will not be on the balance sheet. However, increases in sales will be reflected in our accounts receivable. But we also anticipate that the price of our stock will increase due to the inclusion in ESG trading, as well as brand capital. So while the outcome of such an initiative is technically uncertain, what is certain is that a Fortune 500 company without a clear social purpose is extremely vulnerable to public criticism and brand deterioration. And another risk in social purpose that can't be ignored is not doing it properly. What I mean by that is paying lip service to the change without taking action to impact our culture, operations, and business as a whole. The risk is being perceived as disingenuous and virtue signaling. Because of this, it's critical that we are serious about this brand evolution. One key component that we recommend is tying executive and management performance and bonuses to social purpose metrics. This will ensure that we all follow through on our commitment to social purpose.
Okay, thank you, Kevin. I have another question. What measurable impact might a company's social purpose have on their profitability that you have seen?
Well, so far we have found that having a social purpose and social responsibility program aligned with Sleep Number's mission could boost the company's bottom line by allowing us to pivot to a more values and purpose-focused mode of conducting business, boosting our customer acquisition rate, customer retention rate, and brand equity.
Okay. Another question I have is, while the company decisions will take time to impact their profit expense ratio, how will you anticipate a large company's, a Fortune 100, for example, PE ratio will look after promoting their social purpose? How quickly would you expect to see the changes? How will it impact shareholders?
Based on our projections, we anticipate that Sleep Number's profit expense ratio will remain steady or slightly reduced through the first 3 quarters after implementation. But we expect to see improvements in brand equity in the following fiscal year and corresponding sales gains that following year, as well as driven by increased market share. In the terms of shareholder impact, we expect our share values to grow, as Kevin mentioned. Our stock buyback program is still active, so as a company, we may see a shift in shareholders' desire to sell, but since we don't pay dividends, there will be no changes there.
So I still can't help but feel we are prioritizing these feel-good goals ahead of the financial health of our own company. Our latest earnings release showed that we are seeing very limited growth relative to pre-pandemic levels. Economic uncertainty and external pressures still remain, and not to mention our latest income statement shows our cash flow is heavily concentrated in property and equipment investments. Is this really the right time to be doing this, or should we wait until we are more financially stable?
As we mentioned, Michael, this initiative is necessary to maintain the integrity of our brand. But in order to make sure the company remains healthy while we roll this out, we are focused on expense management to bolster our adjusted EBITDA to EBITDA growth in 2023. These operational trade-offs should not be seen as new, however, as the current fragility of the world's supply chain requires that we remain cautious and resilient to changes regardless. And to address your overall reservation about the cost of this initiative, it should not be seen as a compromise, but rather the new way of doing business. Without a commitment to these ESG goals, we risk a much greater cost in the eye of our customers and business partners.
All right, thank you all for clearly articulating the thoughts and motivation behind our proposal today. It's clear that the risk of not being deliberate in building ESG priorities into our business strategy is too substantial to ignore. Purely capitalistic intentions are no longer enough for investors and stakeholders, which is why we must value brand and customer capital just as much as traditional profit. I move for a vote on whether to commit the necessary funds and resources to this initiative. Board members, all in favor?
Yes.
Aye.
Aye.
Stephen? I'll take that
Aye.
as a yes. All opposed? None? Wonderful. So for our next meeting, we'll discuss tactically how this initiative will be rolled out across the business. Meeting adjourned. Thank you all.